Hey, what's going on, everyone? Welcome back to another Elliott Wave analysis. It has been a hot minute. We are now back on schedule with these weekly video updates. Hopefully you guys didn't miss me too much, but we are now back on track. So we are going to be talking about Bitcoin's shorter, medium, and macro timeframes. Just to kind of recap of what we have talked about. If we go back to our previous video from 2 weeks ago, it's been a long time. It's been playing out quite nicely. If you really think about it, we've been talking about only two main scenarios, and those two main scenarios are still currently in play. And I think the main idea here is that we're still just working for what could be a larger distribution phase of what could be a larger wave 1, 2 in the making before we go for a larger wave 3 to the upside of some kind of larger fifth wave on the macro that we also discussed. But for now, the idea that we discussed, or the very first idea that we had in mind, and the primary idea I like to have in mind, was a possible flat idea, which is a 3-3-5 sequence. And right now, with just small minor market inefficiencies in between, we do have pretty much the necessary components being built up. And we can see that the first leg here is a possible WXY. Now, this is quite subjective in nature of how this wave count can be played out. I'm going to be talking about the different alternative scenarios where we can have a WXYZ scenario here. But for the main idea here is that we're using the context of the preceding waves and the surrounding waves as best as we can. And right now, we're not trying to force anything, and we can always adjust things along the way. But for now, we do have pretty much the necessary first component of what we had in mind back 2 weeks ago. So as you can see, we were looking for some kind of pullback for a wave A of the flat, and we're looking for what could be a B wave of the flat, and we're just seeing how this is going to be resolved, especially around these all-time highs. I think we are going to get some kind of rejection, but if not, there is a scenario that can just blast us up to new all-time highs continuously. Now, that being said, if we're using the context of these waves, especially on the shorter time frames, it's still looking quite corrective. And that gives us pretty good news if you really think about it, because it just gives us far more opportunity to be accumulating Bitcoin, not just for a retail side of things, but for institutionals as well, because there's a lot of institutions that may have missed out. They're just not vocal about it. But if you look at this idea is just very enticing to me, because it does give us a resemblance of what happened back in the beginning of the 2023 bull market. I used this case study quite a bit, and if you look at how this played out, it's playing out very, very similarly from a structural and time and everything perspective, basically. What we had is a wave 1, 2, 3, 4, 5. We had a very strong extension for this wave 1 of a kickoff stage. We had a shorter wave 3 and even a shorter wave 5 that led us into that first degree wave 1 over here. So let me draw this out for everyone. We had a wave 1, 2 here, and that's pretty much the only way we can count it in hindsight. And this is a very important kind of case study to use, because just like back in the trading range over here back in 2023, we were also looking for a possible WXY, XZ, and that's what we're also kind of assuming back and forth, whether it was an ABC, WXY, or WXYZ. But the most important thing is that we had a strong support level here, and I think that may be similar to what we're seeing right now, because it did get supported around the 23.6 and the 1382 level over here. And this was the last level of support, where a lot of people were assuming even a 38.2 or even a 618% rejection or support, where we could have came down and just went back up. But in this case, we only stayed around the 23.6%, and that's what led to the eventual no pullback, no frill, nothing. We just went straight for that bull market, and that's pretty much what we might be seeing here on a shorter time frame scale. As you can see, we had a strong kickoff stage of a wave 1, 2, shorter wave 3, even shorter wave 5. We had a three-wave structure here, very similar in resemblance. It doesn't really matter of how this is playing out. All we know is that this is some kind of correct structure being made here, and right now, this A, B, and C might be in play here. So we just are kind of looking for how this is also playing out similarly in structural. And there was a lot of market inefficiencies at this stage over here too. We had a 1, 2, 3, 4, 5 into a wave A, B, and then a C, a short wave C. This is what led us to that flat structural move of that overall bullish continuation. And that's exactly what we may be looking here for this wave 1, 2. So the most important thing about this scenario is that we are going to look for how reactive it's going to be at this level over here, around the 138.2%, which is the $117,000 levels or the $114,000 levels. We'll just see how this expanded V pocket zone is. But remember, ladies and gentlemen, the most important thing here that we want to be utilizing with the Elliott Wave Theory is just finding the general directions. We've been counting on the shorter time frames quite well, actually, with over the past few weeks with very small margin of error. If you've been following me on social media, by the way, if you aren't following me on X, do give me a follow there because I do give more daily updates. But right now, just using the context as best as we can of the internal, of the higher degree wave counts, the smaller degree wave counts, it's still moving correctively. So that has to give us a forceful assumption that we are working in a possible corrective move. So with that being in mind, the bearish and bullish perspective of how this plays out doesn't really matter. The integral overall approach of how these wave counts are playing out is that you just want to be looking for the general directions. And right now, even though we were looking for a possible deeper correction, if you're following me on social media, we caught ourselves quite early and we were looking for this support level to being held just because there was no real follow-up. We should have seen a stronger impulse to the downside just like we did over here, just to give it that right symmetry, overall timing perspective of how these corrective structures are playing out. So right now, I just feel like we are going to be working for one more high. I'm happy to be wrong, but right now that is the highest probable scenario. Now, with that being said, we do have another uber bullish count, but right now, because we have to use the context, this move here being a three-wave structure just doesn't feel like it's an impulse off the lows, giving us that possible 1, 2, 3, 4, 5. Very possible in a different way, though. We could have a possible diagonal here because usually a motive wave within a diagonal, you're working with threes. When there's indecision within the markets, you can have a possible diagonal here, pullback of a 1, 2, 3, 4, and then 5. That can give us that first wave 1. But overall, or wave 3. Of that extension here. We're just working on the shorter time frames here. But right now, this is still an alternative, and that's the point. We want to be making sure by using the right context and everything, market psychology in mind, as best as we can, and then just kind of narrow down the scenarios, even if it doesn't come to our favorability when we want the instant gratification of higher levels. So that's that. And then we have a third scenario, which is that continuation of that C wave that I talked about on social media. We caught ourselves early because if we go back and use the replay function, you can see this was a perfect timing to have that continuation for that wave C, but we just didn't get that continuation. So with this bounce, especially now coming up on the local time frames, meeting that Fibonacci resistance of around 78.6%, you can see although it's a valid B wave, the 88.6%, I've said it previously, a B wave hitting the 88.6% is absolutely fine just for a deeper B wave, but you really don't want to be having two consecutive 88.6%. But it's possible because there is a way to count this. If the move down was impulsive, we can have this in a minor degree wave 1, 2, 3, 4, 5. That gives us a deeper C wave. So if we actually kind of localize this structure as best as we can, it still gives us an overall relatively okay structure, right? And that being said, I think as long as we just have the overall structure being currently met, then I think it's absolutely fine. We can come down into any of these regions because we do have Fibonacci confluence at those levels over here, which gives us a pretty relatively okay structure when it comes to corrective structures, as we are still looking for the overall context of a larger wave 1, 2, no matter what, because it doesn't really matter, right? We're looking for that expansion phase more than anything else. We shouldn't be shorting the markets until we are actually in a confirmed bear market, even if you are going to enter a short at a later stage. There's just too much risk. And I think that's the biggest thing as well from a risk management perspective. People don't apply risk management too early, and I think that's why bears are all going to be right. They're all going to be right within this current cycle, but they're going to be 200-300% late because they weren't able to risk manage, follow the right trend on the medium and longer time frames. So that being said, everything taken into consideration, if we look at the mega bullish count, the bull market count, everything's still coming into play because we did talk about this in the previous video as well, which is the sentiment of the overall macro integrity of it, which is that we're looking for a larger extended fifth wave. And that is currently the only way that we're counting it. But when it comes to the overall timing perspective and everything, just feels like we are working quite nicely. Everything that's happening on the shorter time frames, even if we do have a wave 1, 2 of a flat idea, it's all still just building us up for what could be a larger wave 3 to the upside of this macro fifth wave extension. That should give us that conclusion of how this bull market could end. Now, this is just all merely a thesis, an educational guess, so whatever I say is not financial advice, of course, But I do like to play these out and narrow these scenarios down as best as we can. I think a lot of Elliotticians have a hard time narrowing down the scenarios using market psychology, the proper market psychology that is, and overall order book flow analysis and so forth, all taking into observation of how these Elliott wave counts are playing out. So if that was helpful, please give a thumbs up, subscribe to the channel if you haven't already. If you are not following me on social media on X, do give me a follow there at XForceGlobal. Patreon membership is available to everyone. We are ramping up our memberships like crazy because I do 2 video exclusive updates every week on Wednesdays and Fridays. And then we do have a Discord membership where I do more periodic updates, even including altcoins and my personal portfolio. If you are interested, do give a shout out to me using one of the links in the description below. Thank you very much. I will see you guys in the next video. Have a fantastic rest of the week. And it's great to be back. We will be back doing more of these weekly video updates, including altcoins. Have a fantastic rest of the week. Bye-bye.